Good morning, good afternoon, good evening, whatever time of the day it is, wherever you are. Welcome to this week's Friday Fix. It is the 20th of March. You join me, Ryan from PIQ, and of course, Team Awesome from Alpha Picks. Alex is on the call. We don't know where Jesse is. Maybe he's still locked in a Little Chef toilet. We'll see. Oh, he's joining. Maybe he's got some reception from the Little Chef toilet. Live from the Little Chef toilet. Here's Jesse. Anyway.
Hello.
Hello. Nothing discussed in this podcast is trading or investment advice, yada, yada, yada. As usual, we will be breaking down the major themes of the week. And I think you can guess what a couple of those are. But guys, how the devil are you?
Well, it's been a long week. I think we can all agree that.
Can I just say, can you believe it was only basically a few weeks ago that Maduro was captured? It feels like it was 2 years ago.
Venezuela. Well, it's true, isn't it?
Feels like a lifetime ago.
Well, and also in terms of, we may as well start with a small little light-hearted tangent to this week when talking about the US's foreign relations was Trump referring to Pearl Harbor.
Oh my
Did you see
God.
it when the Japanese reporter was like, "Why didn't you give Japan advance notice of your strike?" And he was like, "Well, you could also have Pearl Harbor." I was like, just in some ways, you know what I mean? Like,
as a comeback, I think it was a phenomenal comeback. Well,
yeah.
You didn't exactly give us notice when you were bombing Pearl Harbor. I thought that was sensational. I've got to be honest. Yeah.
Yeah. So, I mean, I think that, by now, Trump's foreign policy direction, be it Venezuela or anything else, is best left unpredicted. But this week, I know, so again, let's be honest, the situation, the conflict in Iran is dominating the headlines still. But I actually thought a really good way for us to try and add some value actually this week is looking at the rates markets in particular, where we've seen arguably the biggest and most pronounced moves, obviously aside from oil. And really touching on it, because what we've seen as of literally an hour ago was that the markets are pricing in quite incredibly 3.5 25 basis point rate hikes from the ECB this year.
That's a hike H.
Hike for the capital H. The Bank of England not far behind with 3 hikes fully priced. And even the Fed, and all of these have had central bank meetings this week, which we'll delve into as well. Even the Fed, who on Wednesday had a dot plot, which still showed them factoring in 1 cut this year, is now basically pricing in not a full hike, but the bias is leaning towards a hike versus a cut from the Fed.
Just on the plots, whilst you mentioned that, I think it's worth framing that dot plots basically largely unchanged, right? And I think the reason for that is, even they'll FOMC, well, it's the full 19 members basically will be the first to say we have no idea what's going to happen, therefore we can't really make any assessments, therefore we're just leaving our dots where they were. I think Powell made it very clear that if you were ever going to ignore the dot plots, now is the one to do. Personally, I hate the dot plots because I think people read far too much into it because it's just guessing what's going to happen, right? I know Walsh, who's obviously coming in to replace Powell, he hates the dot plots. Now, I was talking to Michael Brown about this. I would not be a bit surprised if this time next year there are no more dot plots.
Oof.
There you go. Punchy. That's what I'm here for.
Bold call. Bold conviction calls.
Bold calls and filthy jokes.
So, I mean, let's start with the Fed then. Let's start with the Fed from Wednesday night, because they were obviously the first to sort of chat about what was unfolding. And Powell, I thought, struck a pretty middle ground on it. I mean, he flagged up that obviously near-term measures of inflation have risen, which makes sense. But ultimately, dot plots were unchanged, uncertainty there, and they were very much a case of let's see where things go, but with a slight bias towards let's see where things go, but we're not overly concerned. That was the message I got from the Fed on Wednesday. But that was enough still to trigger a move lower in equities, even just off the basis of, expectations for inflation have risen. Guys, we're going to have to wait and see. Let's see what's going on here. That was enough to send markets obviously lower on Wednesday.
Do you think a lot of this was literally a case of lower rates, more free cash, more cash goes into equities, so therefore less, rates not so low, less money flowing into equities? Could it be that binary, that simple?
Well, I think also there was a big element of like the Fed being the safety blanket for markets. And I don't think they got reassured
Yeah,
by the Fed about what they heard on Wednesday. Because I mean, like what I think people were hoping they'll say is that, as other banks have done over the past couple of years, particularly with the come down from the post-pandemic inflation surge, was that, like, oh, the pop high we saw in inflation, we think it's going to be transitory. Don't worry about it, etc., etc. Whereas on this, they weren't like, you know what, although it's a lot more difficult to gauge, they weren't like, we think this energy spike or the future energy spike could be transitory. Don't worry about it. They didn't really offer such reassuring commentary. And I think that's basically what spooked people.
got you. So, yeah, I agree. Yeah.
Um, so yeah, that was Fed. And then ECB, Bank of England on Thursday, both of them were a lot more, I don't really want to say hawkish because it's a strange one to sort of talk through, but they definitely weren't as neutral as Powell and the Fed were on Wednesday.
I said this morning, hawkish with a grimace.
Ooh, hawkish with a lowercase h.
Yeah, yeah.
Um, yeah. So yeah, they were, both of them were. The thing is, to a certain extent, it makes sense as well, right? Because the Eurozone and the UK are a lot more sensitive to energy price inflation given imports. So, like, it does make sense that both of their central banks would be a lot more trying to be reactive to any potential future inflation spike. But yeah, I think the ECB upgraded their inflation forecast to around 2.6% for year end this year from 1.9% previously. So obviously that is factoring in higher energy prices already. And even the Bank of England, which I think is definitely one to talk about, because we saw a yield spike, not just at the short end, but, we're seeing the classic highest levels in the 2-year and the 10-year since 2008 and this chapter. And so, yeah, that's definitely like a big sort of risk off move we've seen. So yeah, Ryan, talk to me Bank of England and rate moves we've seen. Do you think it's rational that we will see 3 hikes by the Bank of England this year?
No, there you go. Absolutely not rational at all. I think the markets are well overcooked. But then we see this, right? When moments of stress or times of stress, markets, go too far. And I think they've absolutely gone too far here. Just tell me, you did cut your you cut your losses on RAD, didn't you, from your trade before?
So I got stopped out on 2 trades this week. So the Euribor long I got stopped out on, and which was the December 26 contract, which is now, as I said, pricing in 3.5 hikes. And I think that's well overdone. But obviously, it's the whole point of having a stop is that you get stopped out and you stop and think about things. So yeah, I got stopped out of that and got stopped out of my oil short, which was arguably more controversial. And look, I accept that. But anyway, back to Bank of England.
Yes, I think it's massively overcooked. I think it was just very poor messaging from Bailey and the MPC, and you can tell that because within minutes, well, a couple of hours, there was a rush job to get Bailey in front of a camera with Faisal Islam to basically say, we're not saying we're going to be hiking, don't worry. But it's just, I think it was very poor communication. And I don't think the market's unwound enough from the back of that, because I just can't, they're not going to hike 3 times this year, surely. The thing is, the thing is what gets me is, it's an energy shock, right? If they could do what they could hike up 200 basis points. It's not going to make oil cheaper. Inflation's still going to be there. This is completely out of their control. So why try and hike rates to stem the inflation? It just makes no sense.
But here's one for you then.
Go on.
You think it's overcooked?
You agree, or?
Yeah, I agree with you that, monetary policy as a transmission mechanism to stem inflation is only, effective as X when oil is trading above $100 a barrel.
Well, the thing is, I'm not a massive believer that in this day and age, with all the other policy tools that are out there, the fiscal and monetary policy tools, that I'm not a massive believer that rates actually impact inflation one jot anyway, to be honest.
Oh, you sound like Erdogan.
But I'm being deadly serious. I think he's onto something. It's not just good for the teeth and the hair. I think their interest rate point, but no, I really do not see how moving interest rates 25 basis points has moves the dial at all when it comes to inflation at the best of times in this day and age. Even less so when the inflation you're worried about is because they're lobbing missiles across the Strait of Hormuz. Yeah, they could do whatever the fuck they want in Threadneedle Street. It's not gonna change anything. So why bother? Just sit on your hands. Anyway,
Yeah. I mean, Jay, do you want to weigh down on this? Where do you stand?
Yeah, I think Ryan makes a good point that if the main inflation shock for the UK is energy, like interest rates aren't going to have much of an effect on that. I think the Fed is like maybe a different example here, because one note I'd made is that with the economic forecast, the core measures for 2026, they're looking at rising to 2.7. So those measures exclude food and energy. So there is still like the inflation side in the US, which they have to be careful about, but that's less present in England, where it's predominantly just this energy spike. So, and then from that you've seen the Fed are kind of in the 0 to 1, and then the Bank of England and ECB have gone kind of a little bit stretched with market pricing. So I think you make a good point on it being slightly overcooked.
And I think the Fed pricing, I would actually say, is the most rational of the three. Like, I think having a neutral, we're pretty much neutral at the minute, even though the normal policy path would probably be, one cut this year. I think that difference, I think, makes complete sense. And even with like the Bank of England and the ECB, like, whereas last week I was like, neither of them are going to cut this year. I fully appreciate that if oil stays above $100 a barrel for another month, let's say, I do think you'll probably see the ECB do a precautionary hike in spring and the Bank of England probably in summer. But in terms of the overshoot, I think that the Euribor, the UK equivalent, they have overshot massively.
Hugely. I still think we should be looking at a cut because the fucking economy's in the fucking toilet.
But the question I have for you, Ryan, is that, okay, you're sitting here right now, and let's say the Sonia contract, okay, which is pricing 3 hikes for December. Are you comfortable enough to get long that contract, or given the amount of uncertainty over oil prices and what's going on at the minute, are you concerned that you could be prematurely stopped out of that trade before it comes back?
No, if it goes against me, I'll just average. I'm very, very comfortable getting long Sonia at these prices. Yes, it's going to bite me on the arse, and I'm going to mug myself off, but put a spread on or something like that. But I mean, it's just ridiculous pricing.
Yeah, but I mean, all I'm saying that is because from my Euribor long, I was long when we were pricing in 2.5 hikes from the ECB, and also you've been stopped out with 3.5 price. So I think the only concern is your conviction, your play, I think, is correct. But do we see erratic markets stretch even further to pricing? I don't know, 4 hikes from the Bank of England.
I just can't see it. Genuinely, I would be maybe do smaller size so I can just run it, and then I can add if it goes silly. But you know what they say, the best entry is normally the price where you get stopped out at.
Yeah.
So I'll be getting in now. Thank you very much.
And then one of the more arguably rational moves we've seen this week, which I don't know quite why people have been oogling so much about it, is obviously precious metals, in particular gold. Last night it fell below $4,600 an ounce. Copper's getting beaten up. Gold's on track for its biggest weekly loss in 6 years. If it closes on that.
I hate that stat because do you know why I hate that stat? Because
tell me.
It's because it's just gone up so much. So of course it's gone up so much in like the most in 20, in ever. So it comes off a little bit, as a percentage, but that equates to a big move. It's this just the big numbers, right? We're all at big numbers.
Oh, fake news. Okay, no, I'll tell you, it's journalism. It's journalism.
Yeah, it is.
Okay, so there you go. Anyway, but the problem is, well, not the problem. It is a lot, because I've seen people be like, gold's a safe haven. What's going on? But it's like, fundamentally, gold has an opportunity cost relative to interest-paying assets, and given the huge move we've seen in the rate space this week, obviously you're going to see gold correlate to that and come significantly lower because it's a non-interest bearing asset. And even during times of financial stress, is that, investors are still, there are other safe havens they can go to, i.e. the US dollar or things like that they can pick up a yield from over gold. So it's like, if the situation's going down the toilet, but rate expectations are rising, gold all of a sudden isn't like a top 3 asset to be holding.
And also, as we know, there's a lot of, sell what you can to fund what you can't. And I think gold is one of those things that's very easy to get off your books, to fund margin requirements elsewhere as well. There's an element of that to it.
And on that point, right, it's been something has been very heavy on people's books because of how long this gold move has been going on for. Everyone's overweight gold, so easy to sell.
I mean, if you're looking to fund a position and you need to free up some money, and you see this massive green P&L on your gold, you're going to be, well, do you know what? Let me just take a bit off of there, please.
Exactly. Yeah, exactly. So, as is now commonplace in our Friday fixes for the past 3 weeks, let's give our little outlook until the next time we talk. So, Ryan, have you seen any developments this week that lead you to conclude that we could see de-escalation in next week, or a ramp up in escalation?
This is the problem, right? It is crystal ball time, and this time last week we were kind of getting a bit kind of complacent and kind of thinking, do you know what, maybe the worst is over. And then Israel decides to bomb the Pars field, and then Iran decides to bomb the Qatari field. If you look at the poly markets, now got odds on, like boots on the ground on Iranian territory by end of April at like 50 or 60%, I think it was last time I checked, something stupid like that. There's rumors that Trump is going to, if he does anything, it will be take over Krag Island, however you pronounce it, which is obviously the Iranian export facility there, basically to turn the taps off of Iran, and saying, basically almost like saying, well, look, if you're not going to let any oil tankers through, we'll stop you sending your own through. That, I think, is increasingly possible. I think Trump has bitten off far more than he can chew. Is Trump the kind of person that backs away from a fight? No, because I think he's the kind of guy that would just rather double down. Last week I thought things were looking better. This week I think things are looking worse. So everything is on the next headline, right? That's why it's so hard to trade. One thing I will say though is, you're seeing like the Qataris and whatnot. They're considering. Well, last I heard they were considering. I don't know if they've actually done any yet, but as of yesterday, I saw news that they were considering force majeures on contracts up to 5 years out for LNG. So this is how bad the situation is for those guys. There's been some significant damage to their LNG export facilities, and these are things you can't just turn the tap back on when the war's over. Even if the war finished tomorrow, there's a lot of production and stuff that has been cut off, and damage that's been done. These things take a long time to spin back up. So I think it's a very prolonged crisis with energy. And I was like on a good podcast yesterday with Anas from Twitter, really, really good oil follow, Dr. Anas. And as they were saying, it's the liquid gas products and stuff that come through the Middle East and through the Strait. Yes, officially it's like 30% of the world relies on the actual physical energy side. But what you're not considering is all the other products and all the other energy related, like liquid gas, like gas liquids, basically. You go into the fertilizer, go into helium production as well. All these different things. There's so much that's going to be damaged off the back of this. I think in the next few weeks, as stockpiles run down in these different other sectors, these kind of like secondary effects, I think in the next few weeks, we're going to hear a lot of more people, a lot more industries, like, ramping down production. Anything from fertilizers to chip manufacturing even is reliant on it. There's just so much at stake here now. I think we could be in for a really grim summer, to be honest.
On
that, Ryan, you know him better than I do, but Rory Johnston I think that's how you say his name.
Yeah.
He's been
Rory Johnson. Not a difficult one, Jay.
Capital R.
Is it Johnston or Johnson?
Good. Johnson.
Oh no.
Yeah. Anyway, but yeah, he's been putting out some very good commentary on
He's
that.
a top lad as well, Rory.
Yeah, very good oil follower.
Yeah. No, the two things I was going to add when you were talking about those points around. One was I saw the stat I saw with Qatar LNG was that they've lost 17%. They won't be able to recoup 17% of their output for the next 5 years.
Yes.
Is the impact because of the damage and everything.
And that's if things go live tomorrow, right? Yeah.
Yes.
And this is the thing, right? We didn't think that. Yeah, again, I take full responsibility for this war, by the way, because I wrote the article in January about how Iranian headlines don't equal $100 oil unless energy infrastructure is hit and unless the Strait of Hormuz closes. And lo and behold, that's the two things that have exactly happened. And at least I got that bit right. That would equal 100.
Yeah.
But yeah,
visionary.
Exactly. That's what I do.
So I agree with you on that. And then the second bit was the whole boots on the ground thing, because I think it was overnight with Netanyahu saying that he sees the war ending a lot faster than people think, and it's kind of like the way, like if the next stage is like, look guys, we're going to be pushed into a global recession because of this situation. At what point do boots go on the ground? You think firstly it's going to be like an Israel one, but would they want to go in without the support of the US? Like, I don't know.
I can't. I can't see Israel boots on the ground at all. It's not it's not their playbook. They've got enough things going on their own borders, which is taking up a lot of their troops. I just can't see them putting boots on the ground at all. I can see US boots on the ground on like Karg Island and whatnot, because you can argue that, technically we're not on Iranian soil, on the Iranian, mainland, we're just on the island, whatnot. So that gives them a bit of optionality. I can see that happening. I can quite see that very, very possibly. But I cannot see Israeli boots on the ground at all. I think that's just for me, that's a non-starter.
So then the question turns is that how can you de-escalate this fast without, actionable boots on the ground? Like, it's a lot tougher from the airspace.
Yeah.
Given what we've seen.
I can't see how you do wind this back easily anymore. I think too much has gone on. I think the attacks on the energy infrastructure to their neighbours is, that is just a huge red line that was crossed. And I think all bets are off now, to be quite frank. And also, let's not forget, obviously, you can't tweet about it if you're in Dubai, but things aren't, things are still being lobbed across the skies in Dubai, etc. But, not that we can talk about it. Hello?
Yeah. Sorry, someone called me, and I think they always call me during the podcast, don't they? They need to go on Do Not Disturb. But anyway, I mean, that's basically everything I wanted to run through.
Tom just asked the question, who are the big winners from all of this? French business, I'm not sure about the French maybe, but I don't know. It's a very good question. Who is the big winners from this? I think short term, US and Russia.
Oh yeah, I was going to say Russia.
Yeah, I think US and Russia are. I think anyone that relies on chemicals is in a bit of a pickle, unless if you rely on chemicals for your manufacturing or whatnot, I think you're in a bit of a pickle and it's going to get worse. I do think if you are someone that's producing energy or producing chemicals and you have access to your feedstocks and you're not having any disruption there, I think you're onto a massive winner, because you'll be naming your price soon enough and people will be paying it. So I think anyone that can kind of, anyone that's any production companies or any manufacturing companies or chemical companies and whatnot that have undisturbed access to feedstock, I think they are, absolutely sitting golden. Also, one that I am very keen to I was going to put a position on today, but I'll probably do a bit more research over the weekend and do it on Monday, is dirty coal. I really think, because this is going to drag on for a long time. And there's a lot of coal plants out there and stuff that have been kind of like idling or well below capacity, because obviously no one likes dirty coal. But I'll give you a clue. When people are starting to freeze and oil and gas is what price, name your price, I think coal plants are going to be fired up back again. And we know there's plenty of those in like Germany, and there's even some in the UK, etc. So my prediction is coal markets. Look for your coal plays. No trading or investment advice.
That's good. The only ones I would throw in the mix as well on that, saying renewable energy. So I think as well, like this whole episode, I think brings back a lot of the renewable energy stocks, the REITs that have been pretty unloved for the past sort of 2 or 3 years, as everyone's basically pushed it to the side, I think you'll see a lot more. You've got the whole like AI data center demand for energy, which is in the background as well. Plus, I think people will be looking at this and being like, actually, do you know what? Like maybe those, grass eating, tree hugging, solar panels actually is not a bad diversification. So I would say like,
that's only for electricity, right? And we still need fossil fuels for a lot of other stuff.
Yeah, it's true. But I think if you look how undervalued a lot of those stocks are, I think you start to see a bit of a bid come on them.
I'll tell you what, one thing that might be worth a punt on,
Tell me,
is finding some like kind of smaller names in oil and gas with links to the North Sea, because I do think even Ed Miliband at some point now, that there's increasingly pressure from his own party now, and even the chair of the UK Renewable Foundation or whatever, so basically the industry body for renewables in the UK, the chair of that even turned around last week, I think it was, and said basically called Ed Miliband out and said he needs to kind of unlock oil and gas from the North Sea. So if we do get a U-turn, which we've got to at some point because his position, Ed Miliband's position, is untenable on this. If we do get that turnaround, and there's some smaller companies out there that have access to fields or field management and stuff, I think they could be really well priced to kind of fly on the back of that. But again,
I like it.
Your investment is basically based on the fact that Ed Miliband's going to see sense. So it's not the best. It's not the best reason to put a trade on, but there you go.
And the other one that, I thought it would have done better over the past month, it hasn't, but I think it's just because it was a bit frothy and it's better entry levels now, is AeroVironment. They released results either this week or late last week, and they were fantastic record results, but just like the bar had been set too high by investors, so it sold off.
Yeah.
They were featured on 60 Minutes on CBS on Tuesday night about how they'll be launching their new like Super Treat drones that are going to go into action very shortly. So I think again, it's more of a prolonged play, but it's like if you do see a lot of the munition supplies, drones, lasers, etc., fully utilized, then some of the backlog orders that you're going to see on AVAV, I think should help to lift that stock up. The caveat is one, it's for a prolonged conflict that you're betting on, and two is that it's had a solid run up and maybe pretty frothy, but yeah, that's a high beta equity idea.
Yeah, like it. Awesome. Are we done? Is that it?
We're done.
Oh, Jesse, anything from you from the toilets? No, sure.
I'm just wondering when this joke will pass, but
it's gonna be a while, mate. It's gonna be a while. Give me love for Big Larry.
Get the gammon on the grill.
Get the gammon. Fire up the grill. This is a massive inside joke that people are going, what the fuck are they on about? Anyway, lads, absolute pleasure. Listeners, I know I say it all the time, if you don't already follow Alpha Picks and the guys individually on social media, do so. And make sure you subscribe to their Substack. It is one of the best Substacks out there for market commentary and whatnot. But yeah, from us, that's it for now. Have a cracking weekend. Go out, touch some grass, look at the sky, get some sun on your face. And